typically, an insurance cycle is a yearly contract. So we set out when we sell a contract, those terms are fixed for the year. That includes the premium. And so when one claims within that year, that doesn't result in automatic increase outside of your renewal cycle. There would be very few examples where insurers would react. This would be typically what we refer to as a multi-claimant. But here I'm talking about the exceptional, really out of the ordinary kind of situations where there's been multiple claims and an insurer reacts. So typically, an insurer will wait for that 12-month period and then reassess the risk. And it's then at that point where one looks back and reconsiders the premium. So at every renewal, we would allow for inflation, just your typical claims inflation that we allow for. But what's really important to understand is just if we take a step back to when the policy is sold, at that point, we take a view of the risk. And the most important part of a premium is our expected claims cost that we foresee to come in. So that's really all about how likely a claim is, and if the claim happens, what the size of the claim will be. And at the end of the year, we reassess that. And there are global factors that we take into consideration, not just specific to the client. So let's say, for example, a certain area, the risk could have changed, a certain vehicle, the risk could have changed. So that's the first thing we look at, but then also specific to the client. And here, really, if a claim came in or multiple claims and really now starts to shift our view of the risks, that's when we'll react. But when we expected a lot of claims or expected big claims and those happen, the reaction is much less. So it's very much about this new view of the risk and incorporating what we've learned in this past year for the client.
Join us on the Unusual Finance Chat, where we decode money mysteries and put you ahead in the financial game.